Okay, we're live. Hello, everybody. Naples Vice report. I'm still trying to decide if I'm going to call it report, show, etc. Who really cares? That's not what matters. So today we got all three major indexes making new all-time highs. I'm sure that's not really any surprise to most folks. I mean, we had our two-day consolidation. We had a pretty hard breakout, and they just went up after that. Moves are starting to get a little bit smaller. We're starting to see ranges kind of consolidate a little bit, which the further we progress into the move, it doesn't really surprise me too much. We have the Dow up 137 up to 28,376. S&P finally getting above the 3,200 area, closing at 3205, up 14. Nasdaq up 8,887, up nearly 60 points. Absolutely staggering moves out of the stock market today. So what's going on? What's the deal? What's the news? Well, I think the most of it is probably what had already been going on from before. The trade deal, the Fed just permanently being a dove at this point. We did have this big spending bill passed today to avoid government shutdown, sending it off to the president. Well, you look in there, and they're just going to keep spending more money. They want to spend more on the military at this point. 500 billion more on the military, which is a pretty staggering figure. They're giving Trump about 1.5 billion for his little construction project down on the border. I think that could have been a little bit of a contributing factor, perhaps, because guess what? If they're just going to keep budget deficit, fiscal stimulus, I mean, it's insane. Guess where all that money's coming from? They're going to be selling all those bonds off, and guess who buys all those bonds? Ding, 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 you got it, the Federal Reserve. And what does the Federal Reserve do? Well, they take all that money and they print it up, out of thin air, and they buy those bonds with the Treasury, and there you go. Buyer of last resort of government debt, which, of course. We also did get a report out today that the House signed the USMCA, which is kind of the reformed version of NAFTA. I haven't really looked into this one quite as much because it's pretty evident that the China narrative has been moving the markets quite a bit more than whatever the USMCA thing doesn't really seem to have a bearing on these markets. Despite what you might see on Bloomberg, like Bloomberg coming out, amid markets rally or market sell off amid USMCA bill. They just say that because they got to have a headline. And to them, there's always got to be a reason aside from just, people buying and selling and speculating and trying to make money in the market. They never talk about that. So that's why I haven't really paid that much attention to it. If it doesn't make the market move, I don't really care so much about it. I listen to other people and I get their thoughts on it, but it's just pretty evident that USMCA hasn't really made this market move a whole lot. But yes, it is signed. But what that does say, and here's another factor that really hasn't impacted the market too much, the fact that the House is signing a bill coming straight from, Donald Trump, which I think is pretty staggering. See, House majority backs USMCA trade deal, which comes from Trump. And this is the same president that they want to get out of office. I think that just goes to show that this whole impeachment thing is political theater. And either one of these two groups has each other by the cojones. I think that's pretty evident. So, I mean, I just don't. All this politics stuff, the only thing that matters to me is what is going to move the market so we can, profit from all the volatility. Impeachments that don't matter, trade deals that don't matter, I don't care. Everybody's so focused on all these political things and arguing with each other about, healthcare and minimum wage, all this other stuff. Number one, the government sucks at managing things, so all that stuff is, if the government's going to be in charge of it, it's probably terrible. But, just my opinion, I think you can understand where I kind of lean, excuse me, a little bit. So, next thing I want to make sure that I'm incorporating better in these is upcoming economic numbers to look at. I'm not going to talk about the specific figures because it's all a joke. It's all fake. All these numbers that they put out, who knows if you can really believe them or not, and who knows what they really mean. But if we get a bad number, we get something less than is expected, that can move the market. So I'll explain to you just exactly why. Economic. Okay, well, I'll explain to you why while I'm pulling this up here. Excuse me. Okay, so when we get bad economic news, and this is why this all comes back to the Fed, and that's why you just have to be so focused on what the Federal Reserve is doing. The weaker the economy gets, the more they print money to float out into the economy, which in turn, ends up finding its way into asset prices. So what do we got tomorrow? GDP revision, that's going to be a big one. If they take GDP down, they revise it lower. I mean, talk about the Federal Reserve pretty much being forced to cut rates, which is going to send stocks way up. Personal income, I don't think that's quite as relevant. Consumer spending, of course, that's important because this is a consumer-driven economy. Core inflation, that's a good one because the Fed has continued to say that we're not reaching our inflation objectives. We're way below our inflation objectives. Once again, it's all about liquidity, this thing. It's all about liquidity. It's all about money moving in things and out of things. That's what markets are. That's what they do. It's cash flow. So if we see that core inflation comes in even a marginally lower, even as expected, and it's not anywhere near the Fed's target, guess what? Market's going to go bananas. And the reason for that being is that puts more pressure on the Fed to create more money. And where's that money going to go? The same place, asset prices. So a big day tomorrow. The big one to watch will probably be the GDP revision. Core inflation at 10 a.m., I'd imagine, may have a little bit of bearing, but the GDP revision is going to be the big one, the important one. And that comes out at 8:30, so you'll be able to see what happens via the futures. And the bond market, I would imagine, probably as well as the dollar. That's probably going to be one that's going to cause quite a bit of havoc in all markets, regardless as to where you play. So key levels, in some of these markets, it's really hard to say because they're coming up, they're soaring. So we're looking at continuous ES on the daily chart. Pullback areas are still looking at about 31.55. At this rate, if we get some pretty bad economic data tomorrow, we'll probably get even closer to the 32 area that I've been watching for. It would make sense that we get there by the end of the week. So then after Christmas, we can have a little bit of a pullback. Don't really care about any of the rest of the stuff. NASDAQ, just watch the S&P. Treasury bonds, actually, because they've been getting slaughtered. And the futures they did a hammer kind of day where they're selling it off all day long, and boom, all of a sudden they just get this bid just out of nowhere. It wasn't on very big volume, which I'd like to see a little bit more volume on a hammer candle kind of day. But considering that, volume's going to be kind of light this time of year, yeah, I get it. So really the important area for the 30-year bond futures, and you can trade the TLT, ETF, you're pretty much that same kind of play, longer term rates. We're still watching that 156 area on the bond futures, and this is on the continuous futures chart. That 156 area seems to have some kind of a bearing here on the bond futures. The other market that I've been talking about was soybeans. Yeah, and soybeans, they did start pulling back a little bit today. And the continuous chart here on TradingView is kind of worthless. And now I lose all my figures. But we did come up to a high on January beans up to 931. We pulled back today after yesterday going pretty much nowhere all day. We pulled back to 924. I'm still looking at, we got a little bit of a 918 kind of area here, which is one of the areas that I've really been watching is 918. Another area I like here in the beans is about 908. So that gives us like a 10-point range. With the kind of the strength of this move and how hard this thing rallied, I'd like to go for the area. But that's just going to go to show. I mean, if we support 10 points higher, that just shows that how much stronger this market is, how much more interested these buyers are. So 908, 918 in the soybean market, which I have a hard time believing that we're going to reach either one of those this week. We could, who knows, but that's where we're at there. British pound, we're actually sitting right at a pretty interesting area here in the pound. We had just all kinds of wicks coming into this area, tops, and the consolidation before really the big move going into the election. And no surprise here, it's sitting at about 130 in the pound. And that's the pound, the British pound futures. I don't talk about spot forex because I just don't trust a lot of those brokers. Maybe you have a good one, that's great, but I trust the CME products before I trust any of those spot brokers. And on top of that, the CME products have options. So you have a lot more flexibility with the kind of strategies that you can implement. You don't just have to be directional. You can sell premium into high IV. Whatever it is that you choose to do, you have that flexibility in the pound. So as we speak right now, we got 130.45 on the pound future. So we're getting in there. We got about 45 more ticks to go here in the pound futures before we get to that area. The other market, which I didn't really talk a whole lot about yesterday, was crude oil, which is coming right up to my trend line here. My trend line, which is, you could say, is a little bit sloppy because I kind of went through a wick here, but that's okay. Usually I draw my trend lines off 4-hour charts, so that probably has something to do with it. But crude right now, with this being at 61.13, we did poke a little bit above my trend line yesterday. But we're sitting right there. And crude, I think, is ready for a pullback. I mean, this has been, we got about a $6 rally here, which would be a little over a 10% move here in about a little under 3 weeks. So my trend line goes from about the end of April of this year, touching the top of back when they was that an oil refinery they blew up in Saudi back in the middle of September. So that's what that trend line, that descending resistance, whatever you want to call it. I call it a trend line because I'm a Tom DeMark guy. So we're coming right up into that area right now. If we break above that area, they're all on the media talking about $70 a barrel. If we get above there, especially with this huge consolidation, I've been talking about, the 10-point range pointing to a 10-point move after the breakout. That's usually the rule of ranges. That puts oil right at 70. And blowing through this trend line, it would be a walk in the park. Do we need a pullback? Sure. Where am I a buyer? Well, we got set up trend here right about 59.75. I'd be interested in that area. If they don't take them there, we got about 59 even. So somewhere between 59 60. We'll have to see how heavy the selling gets after this kind of move, because really, essentially, these things rallied $10 in this wave, this kind of price move by itself. So, I mean, I don't have a particular level. I think here with crude, I'd probably be, call spread, selling put spreads, because when I'm not as precise about where I see a reversal, I'd rather just sell options and just have that flexibility of being able to go maybe a couple of dollars below the price and being able to just let it sit, let it do its thing for a while, and just being able to forget about it, define risk. And the beautiful thing about options on futures is you only have to put up about half the collateral. You're selling credit spreads. You can get a little bit of leverage in there, which I love leverage. So I'm going to go ahead up there. Well, I'm really pretty excited to see what happens after this GDP number comes out tomorrow. I think it's going to be a pretty fascinating experience. Usually days like that, jobs numbers, GDP revisions, things like that tend to be pretty interesting events. So on that note, from beautiful Naples, Florida, this is Vincent Free signing out. And good luck trading out there, and let's make some money.